Yo, what is going on, guys? Welcome to the no bullshit trading for retards, trading made simple, video series, whatever, not course mentorship, but boot camp video series, whatever the fuck we're gonna call it. Welcome. This series, I'm literally gonna be teaching you everything you need to know about day trading, and notice how I didn't say teach you everything you need to know in order to become profitable, because I cannot teach you becoming a profitable trader. You need to stop getting into the space, getting into watching YouTube videos and listening to people that say they can make you profitable. You are the only person that can make yourself profitable. Nobody else. Why? Because profitability in trading, making money in trading, requires three things. It requires experience, which you can't buy. It requires knowledge, which you can learn for free, which is how you should be learning, which is through YouTube. Even if it's not by me, make sure whatever you're learning is free. Don't buy a fucking course. And the next thing is mastering yourself, because trading, I know that might sound cliche, but trading is going to reveal a lot of things about yourself that you didn't know, and it's going to change you as a fucking person and change me as a person. And if it wasn't for trading, I would not be where I am right now, obviously, but on a much deeper scale, okay? So without further ado, I want to show you guys this real thing. When you look up how to start day trading on YouTube, it gets very overwhelming. I don't know why it shows that I watched this video. I never watched these videos. Anyway, notice a pattern. We click on a video. Let's pause right away. Let's see. If you want to turn trading into your biggest income source this year, click here. Course or mentorship or whatever. Let's see here. Pause. Education/private team. Get my indicators. Join the Discord. Nothing wrong with the free Discord. I'm just pointing out these two mainly. Okay, so paid feature. Let's see here.
Here.
I never even watched this video. Get the exact system I use to become a full-time profitable trader. The indicators that I use, and obviously affiliates. Nothing wrong with affiliates. I'm just pointing it out. Let's see. Get this exact system. Paid fucking feature. This is the same shit. You're looking at all of this, bro.
End of this video.
Niche ass background, a fat fucking Cartier. Okay, bro. Join my inner circle and get instant funding with this. Okay, join this, do this, join my this. You need to do this in order to become profitable. Fuck all of that. All you need is someone who explains this shit to you simply. And if you're an experienced trader and you're watching this, you're like, bro, your candles are green and red. I'm doing it for the sake of the video, okay? Some of you guys are completely new to trading. If you don't know exactly what day trading is, I would recommend going and just, doing that kind of research yourself, like the whole understanding what the fuck we're doing here. If you already know what day trading is, you have an idea, you understand that we're trading and selling stocks in the stock market, awesome, stay here. I'm going to teach you one concept per video, maybe two max, because I'm trying to keep this simple, effective. And why am I even doing all of this in the first place? One, because I have people in my comments, my DMs, my streams, everything, asking me to mentor them, teach them. Yo, bro, how did you do trading? I want to do what you do. Excuse me. I have people saying these things, and I remember when I was learning trading, there was one concept that I was trying to understand, and it took me 9 fucking video rewatches to understand that concept. So I'm trying to absolutely minimize that so you guys can understand and learn these things and get yourself going in the trading space, because this space is super fucked up, so you got to be super careful. So I'm just trying to get you in the most honest and effective way how you can get yourself onto the charts every single day, because that's pretty much what I wanted when I was learning day trading from the start. And that's what a lot of people want. They understand that learning is a process, but the people at the start, a lot of people don't even care about making money. That's a huge misconception. But for me, when I was learning trading, I knew it was going to take time to make money in this space. I knew it was going to take time to make money in the charts, to get good at it, to be profitable. But all I wanted to do for the first 3-4 months was to be able to wake up in the morning, get on the charts, and be able to sit there and sort of know what I'm doing and be confident in my ability to take a trade, know what I'm looking at, make decisions. I just wanted to be able to sit there with some level of confidence, even if I was losing, to be able to make a decision for myself on the charts. And that's the biggest thing that a lot of people lack. A lot of people will educate themselves, over-inform themselves about topics, about, a bunch of bullshit that you don't need to know. And they'll get confused. They'll get on the charts. They'll see oh, okay, well, yeah, I see this, but then this other guy explained this, so I don't know if there's it's a bunch of bullshit. Find one fucking, even if it's not me, it doesn't have to be me, okay? There's other people out there that teach trading that are really good. I'm just doing a part of this one because, I want to grow my YouTube and I want to teach you guys, and I don't believe in selling anything trading related. If I really fucking wanted to, I could sell a trading course. I promise you I can sell a trading course. I have people in my DMs, in my comments asking me to mentor them, to teach them, bro. I'm willing to pay. No, you do not need to pay for anything fucking trading related. I swear by that. Okay, never purchase anything trading related that has to do with the course, mentorship, indicators, signals, whatever it may be. You don't need to do that. All you need to do is have discipline and understand that the slower you take trading, okay, that doesn't mean procrastinating it, but I'm saying the slower, like, if you can find a way to learn trading slowly but efficiently, you're gonna find yourself, becoming profitable way faster than shoving information up your ass and trying to learn everything in a week, because you can't. It's going to take time. It's going to take effort. It's going to take things that are required for pretty much any business model, because this, like I said, this trading space is full of dog shit. It's full of people trying to sell you things. It's full of people trying to convince you to do with it, to learn their model, to learn their this, da 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 da. None of that. You just need a simple set of fucking instructions. So my goal with this is to be able to get you guys on the charts, get you guys be able, like I said, get you guys to be able to wake up in the morning, get on the charts, and be able to make a decision and learn from it. Because the worst thing you can do as a trader is find yourself, like I said, informating yourself, even a word, informating, to find yourself over educating yourself on other things. And just because this model didn't show up for a week, bro, my model, the models and the concepts that I'm gonna teach you guys are amazing. Okay, I had 3 losing days this week. This week of price action was absolutely dog shit. I had 3 losing days, and once I saw those 3 losing days and how this week was moving, especially after CPI, which don't worry about that. If you don't know what it is, I'll teach you guys later. But this week was absolutely dog shit, but I stuck to my model. And a lot of people are going to find themselves guilty of revenge trading. Their model doesn't show up for a fucking week, so they move on to someone else's model because it worked that week. Okay, motherfucker, that model that worked that week, that didn't work for you, another week is probably going to not work for you, and then your original model that you stuck with is going to work. Okay, so you need to have the right headspace in this thing. Okay, we're not revenge trading. We're not switching models. We're here to learn trading seriously. We're not here to make money within a fucking month, 2 months, 3 months, 4 months, because that is not going to happen. If it does, that means you just got lucky. Okay, and that doesn't mean you can't learn trading quicker than others. That doesn't mean some people have been have gotten profitable than others. It happens, but you owe the game years. You owe the game years of effort, hard work, and showing up every single day. That doesn't mean you owe the game 5 years before you start seeing, your first little bit of money. You probably will start to see. Now, like I said, I'm going to be completely open and honest with everything. There's some people who have seen money within trading within a year and a half, 2 years, which that's, on the relatively, I want to say, low end, but it's realistic. Okay, you're not going to find yourself being a master of the fucking markets. That, like I said, there's some people that learn quicker than others that are able to get this, because it's tricky, bro. Learning from the start is the hardest about trading. Once you understand your concepts, you understand everything. That's probably like the trickiest part. It's not the hardest, but it's the trickiest to grasp and understand the markets, how they're moving, all of that shit. Okay, so the first thing I want to explain is that, not really talk about, but it's just explain what I'm going to be teaching, the concepts I'm going to be using on ICT concepts, okay, dumbed down so simply, because you don't necessarily want to watch all of ICT's bootcamp. Not anything to do with him. Great content he puts out, definitely information, but it's hours and hours and hours and hours and hours of information that I'm going to dumb down for you guys, that other people have done as well, but I'm dumbing it down in a way that you guys can understand this so simply. I'm trying to teach this to you guys as if I was trying to teach my friend trading, my best friend. He wanted to learn trading. We're trying to get stacked up, breaded up together. I'm going to teach this to you guys the way I teach it to you. So that's everything, mentally wise, that you need to clear up and understand about trading. Now, I'm probably going to have, other videos in this bootcamp talking more about your psychology, your mental, risk management, discipline, all of those super, super, super important things in trading. I know people tell you that it's important, and that might sound, like I said, I'm going to use the word cliche again, that everyone says it, but everyone says it, and that's actually true. There's, your risk management, fuck your strategy, fuck your model. Is your risk management good? Is your discipline good? Is your mental good? Do you not revenge trade? Do you not do those things? I'm going to have videos on those specifically. But what are we going to do in this first video? We're going to cover the first thing you need to know, which, if you guys have absolutely nothing downloaded, where you're brand new, I'm going to help you guys out. Most of you guys probably have this downloaded, but download TradingView. It's what you use to look at the charts, the markets, Like I said, you should probably, before watching this video and understanding the first concept that I'm going to sort of, not even concept, but the first fundamental about trading that I'm going to teach, go watch a video about, like, getting your trading set up, getting your chart set up, getting your platforms ready, so getting an understanding of what, like, trading the stock, what we're even, like, doing here. Once you've done that, you can come back, and here I'm going to teach you, and then now we're getting to, like, the real shit, okay? Now, because it's super I don't necessarily say complicated, but it's better for everyone to go out on their own and sort of set up the chart the way they like it, download what they want. It's probably a little bit easier, and if I, were to explain to you guys, that, it's probably going to take a little bit longer than, like I said, because I want to keep this bootcamp, I want to keep this series short, sweet, simple, and effective. So if I were to go into all that, into how to install TradingView, probably time for another video, and I'm not even at my actual setup right now. I'm on a Mac in south of France, not a plug. I don't know why I said not a plug, whatever. But here to guys, like I said, to keep this simple, I'm going to teach you fundamentals. So if you haven't done that, if you haven't set up your trading view, if you haven't set up all that stuff, if you don't even understand what the fuck we're doing, I would recommend go watching a video now. I can't really recommend. I just watched a napkin fly away into the mountains. Damn. I like that napkin as well. I just watched it fly off the balcony. I didn't even know it was there. I'm never seeing that napkin again. Whatever. So, like I said, if you haven't got that done, go understand what we're doing here. Come back. We're ready to learn. Okay, you back? Cool. What's the first thing we're fucking learning? Candlesticks. These are candlesticks. Okay? This is what we use to look and observe how price action is just what we call, moving up and down, the action, the movement of the price. These candlesticks determine where it moved, where and how it might have moved. Here we can see on the right-hand side. Now, this is the NASDAQ, okay? So, I'm going to be teaching you guys futures, how to trade the NASDAQ and sort of the S&P as well. If you guys don't know, there are correlated indexes, so they're going to be, relatively similar in, movement. Not relatively, pretty similar in movement. So, anyways, what the fuck is a candlestick? Candlestick is how we observe price moving on a time frame. What are time frames? Time frames is, well, it's pretty much what it is. It's a, it's a time frame that we use to look at how price moved in that time frame. And there's a bunch of time frames: the 1, 5, 10, 15, 30, 45 second. You have the 1 minute, 2 minute, 3 minute, 5 minute, 10 minute, 15 minute, 30, 45 minute, 1 hour, 2 hour, 3 hour, 4 hour, 6 hour. You have the daily time frame: the daily, weekly, monthly, 3 months, 6 months, 12 months, all that stuff. I wouldn't really worry about anything that has to do with, this right now. Right now I'm just trying to teach you guys, well, this. Now my throat is hurting, so let me sip. Yes, I'm drinking Coke. There's no water in the house. I need to go get water for the Airbnb. Anyway, so we're looking at a 1 hour candlestick right now. Now the market is not. You're wondering why it's not moving, because it's Saturday. Markets are closed on the weekends. You guys probably know that. So let's draw out a candlestick for you guys so you guys can understand what the fuck this is. So this is a candle. This is another candle. I'm gonna teach you guys the anatomy. Okay, the anatomy of a candle. Just like rub that in. Actually, you know what? Let's make this simpler. Let's use a fucking box. Buff. Buff. Okay, let's make this red. And let's make this green. Buff. Beautiful. Okay, now I'm gonna do this. You guys can see. Duck. Duck and duck. Allez. Oh, wait, that one's kind of buns. Perfect. Okay. These are candlesticks. This green one, what is it? Do you guys know what it is? It's an up candle. Up means, well, fucking moved up. It's green. It's green, it moves up. If we can use our analysis of colors based off of pattern recognition and our brain, we can understand that something that's green probably means good. Like when you're sitting at a traffic light and it's green, it means you should go. If it's red, it means you should stop. That actually doesn't have anything to do with this, but anyway, what are these boxes here? Don't even worry about this the little dicks here. These are the bodies of the candle. Okay, this shows the open point and the close point of the candle, and like I said, we are observing this on time frames. Each candle represents a time frame. So right here, anatomy, what is this here? What does the top of this here mean? This is the open of the candle, meaning when a new time frame appears, when the new candle appears on this new time frame, that has occurred because time moves forward. You get what I'm saying? that means it opened here, meaning the previous candle, the one before that, had closed at this same level. So what, like, write this down in your notes. The next candle, or wait, fuck, like, yeah, a candle opens where the previous candle closed. And pretty much vice versa. Like, I don't know, not necessarily vice versa, because I'll explain it in a second. But the previous candle closes where the new candle, no, that doesn't make sense. Fuck it. A new candle opens where a previous one closed. Write that down. A new candle opens where the previous one closed. Okay? And understand this. When it's a green candle, that means it went like this. It means it opened under and finished over. Why? Because it went up. Just think of it. If you're trying to identify, the body, if you're trying to identify if it was an up candle, you can use color. But say we didn't have colors, you could probably see, well, we look right here on this left-hand side. We can use the charts here, actually, for a better reference. We have this. This was a red. Actually, that's like more of a solid candle. Okay, here we see this red candle. Why is it red? Because 11 a.m. opened at here. We can see. Let's just use this as an example. We use the little line. We can see it opened at, on the right-hand side. You can see a little thing, 30,199.25. That's the level of price. Where did the previous one close? 30,199.50. Now, yes, 0.5, 0.25 because of spread. Don't worry about that as long as it's, fucking there. But anyway, 30,199 and 30,199. The 11 a.m. candle opened, okay, where the previous one closed. And it's pretty easy to identify it just because you can see where it lines up. Like, you could see here, the 3 p.m. candle opened. You can tell that it opened here because of this, and you can tell that, oh, well, why isn't this the open? Well, because it's not fucking lined up, idiot. Excuse me. Because it's not lined up. So all that's kind of like, and sometimes, these are hourly. Well, this is actually a new day open, meaning that there's a big, price moved over not necessarily moved over the weekend because of events in the world and all that shit happening. It's not going to open, perfectly. But we can see in the day, we can see, look, here, 2 a.m. candle closed here. It opened here. Well, that's a little bit smaller candle, but we can see here. It opened here. Why did it open here? Because the previous candle closed here. And why did it close here and maybe not down here? Well, because it opened here, went up, it closed above where it opened. Because it's a green candle. Remember, if it's a green candle, it opens. The close will always be above the open, and if it's a down candle, the close will always be below the open. It's like or if it's Got it? Now, here we can see. Boom. 2 a.m. candle opened, moved down from where it opened, and closed. So wherever it closed once 3 a.m. hit. Once 3 a.m. hit, the new candle opens. It moves here, price moves, and guess what? It closed above. So the next candle is going to follow. It's going to close, open here. They're all kind of correlated. Now, it might sound a little complicated what I'm saying, but like I said, you can just look. You can just look and identify. So go on your trading view right now and just take a look at the chart. Doesn't matter what the time frame is, and just look. Just be like, I want you to identify where did it open and close. Go see. Pick a time frame. Doesn't matter. 1 hour could be whatever. You can see a candle. We have a candle here. Oh, okay. So how can I tell where this candle opened? Well, because it's pretty much touching at the same level that the previous one did. This one, oh, okay. So open. Then it went up. It closed here. So if it closed here, that means the next candle has to open, the horizontal to wherever it closed. The same thing. Understood. Perfect. Go do that. Come back. Now, same thing for a down candle, except a down. Let me write this actually out on here. So we have this open, or wait, no, it's actually the opposite here. Open and close. How do we know that this is the open? Answer this. How do we know that this is the open and this is the close and not vice versa? Because it's an up candle. Because it opened and closed above where it opened. If it opened and closed below, it would be a down candle. Hence, so what would I write here? I would write open, because it's a down candle. That way we know it's the open. And we can't know these things. We can't know if it's going to be up candle or a down candle until it closes. So while a candle is forming, you can't necessarily tell because it could move up and down. And you see, okay, the moment that it closes, and you can make a prediction, because if price all the way down here on the hourly, chances are it's not going to come all the way back up. And you can notice that, okay, so it's probably going to be down a little, but I can't, not theoretically, but technically, it's not a down candle until it closes. So once it's closed, be like, okay, so this is a down candle. For sure, that means the next candle is going to open here. So we'll write this out. Open close. Okay, and vice versa. Like I said, boom. So open. How do we know it's green? Why? Because it opened, moved up, and closed. How do we know this is a down candle? Because it closed here. This next candle closed at relatively the same level. Why would it open here? Because the previous one closed at that level. So the next, obviously, the next candle is going to open at that level because price doesn't move in between time. It doesn't move. Okay, it's not gonna. If 5 p.m. this candle closed at 5 p.m. and this is the 5:01 candle, that means a minute went by. Price is not gonna go up here. It's not gonna randomly jump up there unless it's a new day open or there's like some really big spread or some shit. But for the majority of fundamentals, the next, like I said, you guys have this written down. The next candle opens where the previous one closed. And how do we know that this is a down candle? Well, because it opened and it closed, the time frame closed, the minute closed, or 5 minute, 10 minute, whatever it closed, the time frame, next time frame moved on below the open. And this could be an up candle too, which is why we have these wicks. This is a wick. These little lines you see out here are wicks, okay? Let's write this out. I can't, where'd it go? Okay, this is a, actually, write candle. Actually, no, I'll just write wick. Wick, okay? Now, majority of the time, every single candle is going to have a wick. Okay, there are some candles that simply close at the peak price or the lowest price, so they're not necessarily going to have a wick. But what does the wick show us? The wick shows us the maximum and the minimum point, the highest and the lowest point that candle ever traveled. Okay, they're relevant, but that doesn't have to do with exactly with the bodies and the opening and the closing of the candles. But it does show us where price moved up, like went to that level. That means price had gone to a certain up, or had gone to a certain point and came down to a certain point, but it didn't close there. Okay, so we can see it here. Price, let's just use our brains for a second. We can look at this right here. What does this wick indicate? That indicates that the previous candle had closed at 7, next candle opened at 8, and in between 8 p.m., 8 and 9, or no, a.m., sorry, between 8 and 9 a.m. price, this candle had gone all the way up here, but it ended up coming down before 9 p.m. and closed here. Okay, and that also means this wick, this huge wick we have here, means that between 8 and 9 p.m. price had gone down, had been in this area before, but ended up coming back up, flipping this way, or I can't exactly tell you how, if it went this way first or this way first, and I wouldn't be able to tell you unless I go in a smaller time frame, but I'm explaining to you what a wick is. So listen, it means the price had gone up here, but it didn't close there. It shows us the high, like I said, the minimum and the maximum point of which the candle had traveled, where price had gone, and that every single candle has a wick. Okay, this video is simply to explain to you guys how we can identify where price had moved. And it's the same thing in these. If it's a green, or doesn't because wicks doesn't necessarily matter if it's a green or a red candle. This for green and red are both top wicks, and these are bottom wicks. And wicks can be used for concepts such as liquidity, which I'm going to explain to you in another video. But we can see here that the wick had hit it, so that went down. I'm going to explain that. I'm going to explain that later. But you guys understand that we can use these. Wicks are super important in telling us where price had moved, and if it's gonna if we can use our model in it, or our setup, or what price might do next. Because essentially what it is, we're identifying these little candles, these boxes with fucking lines, we're using these to understand where price could potentially move in the future. It's that simple. So let's go over it one more time. Why did this 4 a.m. candle, why is it green? Well, because this one opened here. It opened at the bottom, opened here, then it moved up. It closed once 4 a.m. hit, and once 4 a.m. hit for that hour, price had moved up. And once 5 a.m. hit, the next candle moves on. So it's going to open here. It's not going to open here, down here, or fucking up. It's fucking anywhere, okay? It's going to open where the previous one closed. What is a wick? A wick is going to show us the top and the bottom point of where price had moved. So we can see here, this tiny red candle we have here means this here. It opened. Okay, we can see that it's a down candle. Why? One, because it's red. Two, because it closed below its open. We can also see that this little wick here shows us that price had traveled down here, but then came back up within the hour time span. And like I said, we can go to the 1 minute time frame, meaning a candle appears every 1 minute. Okay, so the 1 minute is obviously going to look a little bit more like, not going to look as clean as other time frames, because it's just price isn't going to move as quickly. You're watching. How do I explain it? It's like, think of it as looking at like a TV and looking at pixels on a TV. Okay, you have like 4-bit, 16-bit, 32-bit, 64, 128-bit, and the higher it goes, the more it's clearer. You can see more of what's happening, but there's more of what's going on. Doesn't mean like don't take the fact that it's a TV that it's gonna look clear. All I'm saying is that the more of there it is, the more you're gonna see. So there's a lot more to see. It's less simple. Okay, like I said, if we move to the daily, or actually no, the 1 hour is probably better. If we move to the 1 hour, it's gonna look a little bit cleaner in terms of moving and stuff like that, and there's not gonna be as many imbalances in price or like gaps you see. Like here, it's just like it's kind of ugly. You don't really see that as much on the 1 hour, just because price moves according to time, all that stuff. So, and there's like different times at which price moves. Here we can see, I'll get into this in another video, but we can see between 9:30 and pretty much 12, we had quite a big push down. But then after that, it was PM. Price was moving relatively slow, which happens on most days, also considering it was a Friday and the market's closed there. So, motherfuckers, that's it for this video. A little bit sad, I know. We don't got much more to talk about because it's a candlestick. I hope you guys understood. If you need to rewatch this video, rewatch. I'm trying, like I said, you shouldn't have to, because I'm trying to explain this as simple as possible. If you have questions, whatever, ask me in the comments or shoot me a DM on Discord. Join the Discord, shoot me a DM. I'll be happy to answer you. But that is it. That is the first concept. I'm not going to over-educate you guys. You're not going to overcomplicate it. You can go ahead and watch the next video. Like I said, I wouldn't recommend watching a shit ton of videos before you even learn trading, or not before you learn trading, but while you're learning trading. Just keep it simple. Even if it's like I'm gonna watch 2 videos a day. I'm gonna make some notes. I'm gonna look at the charts. I'm gonna see if I can spot this, understand it, and I'm gonna move on. The fastest way to kill your trading is by taking it too fast, and the best way to improve your trading is by taking it slow. That is going to wrap it up for this video. Now you know what a fucking candlestick is. Not too sure what I'm going to make the next fundamental video on, but welcome to this, series where I'm going to teach you trading fucking honestly, simply, so you guys can understand how the fuck I do this, how the fuck other people do this, and how you can do it yourself. If you have any questions, comments, DM, whatever, thank you for watching, and I will see you guys in the next one. Let's fucking do this, okay? It's going to be hype as shit. You guys are going to learn trading, okay? All right. Peace.